guys, it's Brian. Welcome to Financial Fitness. If you're new to the channel, please subscribe. In this video, I'm going to talk about what some of your options are once you have a wash sale on stocks, and even more examples of different scenarios involving wash sales than in my first wash sale video. And we're starting right now. I've been getting some good questions in the comments of my initial wash sale video and thought I'd make a frequently asked questions response video to answer them. Lots of examples that were mentioned were on what you can or can't do once you have a wash sale on some of your stock shares. Hopefully I can resolve a lot of these questions here. It's something I didn't cover as much in my first wash sale video. In my first video, I explained the wash sale rule, averaging down, and how to avoid wash sales. If you want to know more about what a wash sale is, the wash sale rule, and how averaging down works, please watch my first wash sale video, which I'll pin as a comment below and at the end of the video. In the questions I'm going to review here, typically averaging down happens before a wash sale comes into play. Averaging down is an investing strategy in which an investor purchases additional shares of a previously initiated investment after the price has dropped further. The result of this second purchase is a decrease in the average price at which an investor purchased the stock. So the first question I'll go over is whether the amount of the wash sale is taken out of the cash of your brokerage account. So in this example, buying one share of a stock at $10, selling at a loss of $5, which causes a $5 wash sale, once one share is repurchased within 30 days of selling at a loss. The one share in this example was repurchased at $1, and so only $1 should be taken out of your account, even though the wash sale adjusted cost basis would be $6. It would not take $6 out of your account because then the loss would be recorded twice. Once when you sell at a loss, and again when the wash sale loss is added to the cost basis on the repurchase and money is used for the adjusted repurchase. The answer to this is no. It is an accounting adjustment and the wash sale loss amount is not taken out of your account for a repurchase. Check your trade activity and statements from your broker to see how wash sales are adjusted onto your shares once you have a wash sale. The second question is, how did a wash sale happen? So typically when an investor initially discovers wash sales, it's usually from causing one by mistake without knowing about the wash sale rule first, which is how I learned years ago about how they work too, and why I eventually made 2 videos on wash sales with lots of examples explaining both how to avoid wash sales and now what you can or can't do once you encounter them. I highly doubt it's something that people look up and understand fully before they start investing or trading. It's definitely a topic where you learn by doing and experiencing it, unfortunately. With that being said, wash sales happen when there is a loss taken on a stock and then the same stock or an option on that stock is repurchased within 30 days before or after selling, which causes a wash sale to be triggered, disallowing the loss. Keep in mind that your broker usually by default sets any selling of shares to FIFO, or first in, first out, regardless of purchase price, so often that can cause shares to be sold at a loss when it wasn't your intention. This can be avoided sometimes by designating specific bunches of shares to be sold during the T+2 settlement period. In the 2 days after the shares are sold, you can designate if you only want the in-the-money shares sold or a mix of shares depending on your purchase prices. This can be done on the trade activity screen and it should be called something like reassign lots. The third question is on calculating the net gain or loss on your stock purchases when there is a wash sale, and I'll speak to the 2 ways a wash sale can be added to the shares you own. So in this example, selling one share of a stock at a loss of $200.50, but then buying back 2 shares of that same stock the next day at $170. The cost basis on one of the 2 shares in this example should be $170 as expected, and the other share should have the wash sale adjusted cost basis to $370.50, which adds the $200.50 loss to the $170. This only happened on one share because only one share was sold at a loss. Theoretically, a broker can spread the loss by dividing it evenly across the 2 shares purchased, making both shares have a wash sale adjusted cost basis of $270.25. The total dollar amount purchased is $340, but with the wash sale adjustment, it would be counted as a total of $540.50, either spread into 1 share or 2 shares. Depending on the timing and how many shares of a stock you purchase, a broker can add the wash sale adjustment to any particular bunch of shares but generally they will match it back to how many shares were sold at a loss and add the wash sale amount on that same amount of shares purchased. Sometimes, if you call your broker during the T+2 settlement period and request them to move a wash sale to a different bunch of shares or divide it evenly across all your shares, they might help you. It's definitely not a guarantee that they will, but if they do, it can work to your advantage depending on what your plan is for the next trade on that stock. The fourth question is, should you get rid of a wash sale or hold it? The answer to this is really situational based on what's in your portfolio and what your strategy is for any particular stock. So honestly, it depends. But I'd say don't let a specific wash sale alone dictate whether you buy, sell, or hold a stock. Set targets and have reasons you want to either buy, sell, or hold. Those reasons could be technical reasons, fundamental reasons, a combination of both. Some news came out that changed your opinion or outlook for the stock, or because you might need to because of a margin call or margin interest is adding up. The fifth question is, if you have a wash sale, how do you get rid of it or clear it so that it doesn't impact future trades on the same stock? So when you already have a wash sale, it won't go away until you take one of the following actions. You specifically sell only the shares with the wash sale at a profit above the wash sale adjusted cost basis. You sell all shares of that stock completely and not buy that same stock back or an option on that stock for 30 days. Some shares could be at a profit or a loss. Sell all shares at a profit above the wash sale adjusted cost basis. There is nothing stopping you from buying the same stock back and averaging down, but it could potentially cause additional wash sales later if you decide to sell any shares at a loss within 30 days of your most recent purchase of shares on that stock if you intend to continue averaging down. I speak to this particularly in examples 2 through 5 in my initial wash sale video, if you want to rewatch those examples. If you were to keep selling some shares at a loss, the 30 days would keep resetting, and the wash sales would keep increasing the cost basis of your existing shares. So that's not ideal. The sixth question is, in what situations would you want to intentionally cause a wash sale once you understand how the wash sale rule works? The primary reason would be if you are at a loss and maybe have been for some time and either think the trade isn't working out like you hoped it might, and you're somewhat close to breaking even and sell at a loss with the intention of buying it back again if it goes lower within 30 days. This would intentionally cause a wash sale if and when you repurchase the same stock within 30 days. Two other reasons might be if you are on margin and either want to limit the amount of margin interest you are paying on a losing trade, or if you are forced to sell a losing trade because of getting a margin call. But within 30 days, once you have potentially opened up some money from closing out some margin trades, manage to buy back the same stock at a better price and intentionally cause a wash sale. It's not ideal to intentionally cause a wash sale, but don't let wash sales alone impact your investing decisions. Check out my video on margin trading and margin calls if you haven't already. The seventh question is, if you want to clear up your trades for tax season and you want to realize your losses for the current calendar year towards the end of the year around November or December. Should you sell your stocks and options and stop trading all wash sale positions for 31 days going into a new year, or is it better to avoid wash sales whenever possible to not have these problems? Both are definitely good options to keep your 1099s clean for your taxes. There is nothing wrong with closing everything towards the end of the year or just avoiding wash sales, but if I had to pick only one, I'd say the first option I think is slightly better, because avoiding all wash sales can potentially cause you to make some investment decisions you otherwise might not have over the course of the year. And in the previous example, causing a wash sale intentionally may even help you in some rare cases. Again, don't let either a wash sale or the potential to get a wash sale be the main reason you make a trade decision. Consult a financial advisor, accountant, CPA for any trading scenarios that might impact you and your taxes. Check out my first video on wash sales if you haven't already for examples of how to avoid wash sales. Thanks so much for watching. I hope you liked this video and found it insightful. Click the like button if you did, and please subscribe if you haven't already. Click the notification bell so you can see when I post videos next. Feel free to leave comments, questions, and any topics you might want to hear about in future videos to get on track to being financially fit. See you in the next video.